the Federal Reserve in America, the Fed, they kept interest rates artificially low, and they deliberately produced a housing bubble. That was a deliberate action.
In today's video, Marc Faber, an investment advisor, fund manager, media commentator and author, discusses the role of central banks in the current global economic crisis, and how their focus on asset inflation has led to misallocation of capital, and a generation of people who cannot afford to buy properties without excessive leverage. He also warns of an inflation crisis, as interest rates rise and the negative impact of invisible taxes like inflation on people's cost of living.
We're in a mess globally at the moment. What should we have done to not get into this crazy position we're in at the moment?
Well, I think the answer is actually quite simple. I believe that central banks went off their mission, essentially, which is to see to it that money has some value. In other words, your paper money, that it doesn't depreciate, that it's a store of value, and that it is a reliable unit of account. And somewhere in the 1980s, that mission got lost in the boom of assets, because as they eased the monetary policies, and I have to explain here, the central bank's easy monetary policies were kind of forced upon them by growing fiscal deficits. You understand? The government, they can have deficits, but in order to cover the deficits, the fiscal deficits, they ought to increase taxation.
Okay.
So your personal income tax goes up, and the sales tax in the department stores goes up, but these are visible taxes, and individuals don't like to be taxed. This is one of the human natures. They don't like to pay taxes. But if the tax is invisible, and let's face it, that inflation is a tax, it arises because fiscal deficits are financed by money printing. So all the years of essentially deficit financing and all the years of asset appreciation were inflationary, but it was an inflation that the public likes. In other words, when home prices go up, they like it. They don't like it forever, because as home prices go up and as commercial properties go up in value, eventually rents also go up. And that is something that the majority doesn't like, because the rental expenditures is paid by the majority that doesn't own commercial properties. It's a minority that own a lot of commercial properties. And even home prices is not obvious that it's beneficial. But initially, people liked it, this asset inflation. And the portfolio managers all applauded the central bankers, because portfolio managers get paid by the appreciation of the assets. In other words, you manage $1 million, it goes up by 20% per annum every year. The asset grows, and therefore also your fees. This is, of course, applauded by the financial community, and their bonuses go up. So the financial community is actually also guilty, in the sense that they encouraged and tolerated irresponsible monetary policies. But I would say, especially after the first financial crisis in 2000, 2002, the Federal Reserve in America, the Fed, they kept interest rates artificially low, and they deliberately produced a housing bubble. That was a deliberate action, supported by Keynesian like Paul Krugman, and also Bernanke said, yeah, well, if home prices go up, we can postpone the problems and so forth. So they kept interest rates artificially low, and we had this gigantic housing bubble with low quality credit, subprime lending and so forth. Then it collapsed and led to the great financial crisis of 2008, 2009. And after that, the Fed doubled down and kept interest rates near zero. And in Europe, the geniuses at the ECB went into negative interest rates. You understand?
Yeah.
And that was really a colossal mistake, especially since they kept these zero interest rates and below zero interest rates at those artificially low levels for far too long. They should have, maybe for a year, I could understand, they would have said, well, we want to kind of solve the financial crisis and so forth. But it's not the solution, it just postpones everything.
Yep.
And now, when inflation, you see, inflation is a very complex issue, because when stocks go up, people will say it's a bull market. When the property market goes up, they say it's a bull market. But when the price of carrots and potatoes and fish and meat goes up, they say it's inflation. Yes, it's consumer price inflation. The other is an asset inflation.
Yeah.
But in character, both are the same and both are undesirable, because the asset inflation produces a generation of people who cannot afford to buy properties unless they leverage, to the hilt. In other words, they borrow 90%, 95%, or even 100%. So these were monetary mistakes that occurred. And because interest rates were at zero, it encouraged people to have zombie companies.
Yeah.
You understand? If you borrow at 10% per annum, you have to achieve a profit of, say, 12 or 15% or 20% to make a deal out of it. But if your cost of financing is zero, you don't need to show a profit for years. You can keep on postponing it. So that created a lot of misallocations of capital. And that, I think, it was the mistake that could have been avoided. But, in a bubble, the Fed prints money, and the people are applauding it. Nobody's critical. We investors and observers always ask us, when is the end? You understand? Mm-hmm. I knew people in the mid-'80s, they thought the debt growth in America is unsustainable and that the whole thing will collapse. Okay, we had one day collapse in '87, also in Australia, where all these entrepreneurs, the Australian entrepreneurial stocks, they got slashed by 50% in one day. But afterwards it recovered with different stocks. But it recovered, and the property market has kept on going up and so forth. And then the opening of China was, of course, good for the world in two respects. First, they had a very large and growing demand for industrial commodities, which was beneficial for Australia. And two, because they produced goods at the low prices compared to what we can produce in the Western world, their share of export markets grew, but they also caused disinflation in good prices. Yeah. In other words, if you bought a telephone in year 2000, it was basically cheaper than in 1990. Certainly when you consider the quality improvements. but also car prices and so forth, good prices, appliances and so forth, didn't go up in price much. Services did go up, but the central bankers have a funny way to calculate inflation.
Oh, don't they?
Yeah. Which understates the cost of living increases of people.
Yeah.
But you know, referring to your question, you look at Argentina and you look at Turkey. Turkey has an inflation rate of, say, 80%. And if you and I go on a romantic walk on the on the side of the Bosphorus in Istanbul, life is normal. You wouldn't notice that they have 80% inflation. And this is one of the concerns I have at the present time. Okay, the Fed has increased interest rates, but the last time inflation was as high as it is now was in 1973, 74.
Yeah.
And by then, say they didn't have what we call today the Fed fund rate. They used essentially the prime rate, the lending rate, but it was at 12%.
Wow.
Today, it's, you know, the 10 years Treasury bond was over 9% at the time. And now the Treasury, the 10 years, is at less than 4%, about 3.5%. So inflation adjusted, the reality is that interest rates are still far too low. The inflation rate is, say, I don't know, each household has a different inflation rate, but it is between, say, 6% minimum to 12%.
Yeah.
The cost of living increase. Yesterday I saw the cost of living increases in Europe, in the EU, for food up 15%.